he has he has been trading into the market for more than 4 decades. So that makes him really unique. I mean, he is not somebody who has been just giving advice or just teaching people. He has been giving advice to institutions, to large corporates, to brokerage house, the desks of research desks of brokerage houses. He has been having his own research setup. So he has everything to his credit. So that's a brief about him. Uh, Way back year 2020, so year 2020, January, when COVID was not there at all in India. So one fine day, he was telling me in the campus that day, that moment we used to operate out of our campus at Delhi. So he was telling me that Rajesh, market is going to fall down, market is going to crash. And I was asking him, sir, why do you think so? And he said, Rajesh, I mean, I can't give you a reason, but technically my forecast is based on the chart. My forecast is the market is going to come down to 8,000 or below 8,000 levels. That was when market was somewhere around 12,500 or something. So it was tough to believe, but we always knew that he gonna be right all the time. So and he was right. When the market fell down to 7.5 or something, around 7,000, and then he started saying that Rajesh, it's going to go up. It's going to go to 15,000, 13,500, 14,000, or more than that. And that's when again, I mean, his forecast was again proven right. I think I am meeting you, sir, after 1.5, 2 months. I think last time we shared the screen space, that was in April somewhere. So April, we had a talk with Ashok sir here in the live session, and that talk was about uh, is the second wave going to make the market crash? Second wave was really at its disastrous best. I mean, that was probably the most disastrous thing. So the question that we were trying to learn from him or to get an answer from him was, how is the market going to respond to second wave, knowing that it's going to be a killer in terms of deep economic impacts, killer in terms of industries being closed, the whole economy coming on a standstill. So what is going to happen? I'll quickly take 3-4 minutes only. I'll show you a video snippet of what he answered me that day on the live webinar. I have a small recording of that. I'll quickly share that. I'll show you what he shared that day. Kanaya, tell me if you can hear this voice when I play the video. Can you see the video screen? Kanaya? Kanaya, can you see the video screen?
Yes, sir, it's visible.
Okay. Ashok, just confirm me when I play this video. Just confirm me if you can hear the voice also.
Mine it on
Okay,
a
sir.
complete chart. All these.
Yeah, it's clear.
You can hear?
Yes, sir. Yes, sir.
Okay. So, ladies and gentlemen, what I am going to present to you now, next 4 minutes, an extract of what Ashok sir was forecasting about the market 2 months ago. Okay, of how COVID is going to impact the market. Will the market crash, or if not, then why? If yes, why? So just just go through this.
You will see that in a different slide now. Once I start moving there. Okay. So now coming to next slide, Ashok. Okay. Ashok, slide please.
Yeah, it's end, sir. Now I have to.
Yeah, I want you to come to the next slide, last slide.
Okay, sir.
Okay, guys. Now, what I'm saying is now we are going to go for the forecast of this, the second leg of COVID. Now, again, I'm coming to that key point again. I had already hit the length of third wave. That means I was waiting for a correction to come in. And mystically, the second leg of COVID has started. Now, what do you call this? A coincidence? A study? What do you call this? I have no clue. But this is what I was waiting for. If you go on my Facebook page, you would realize I have been maintaining this for almost 1.5 months now, that this market is due for a correction. Are you guys there with me? All right. Now, Ashok, can we stop this? Okay. Now understand what I'm trying to tell you this, okay? Basically what I'm trying to say is we had estimated length of the third wave and a length of fifth wave on an overall structure. On an overall structure, the fifth wave is already complete, okay? That means what we started from October 2008, the market had to hit a minimum target, which was 15,500. That has already been hit. Now, if I look at a larger frame, that means we are now moving into extensions. And for those extensions to be satisfied, every wave count has to have its own wave count within it, which needs to be completed. And in the current wave count, in the fifth wave count, we are in the third leg of the fifth wave count. That means we are now looking at a correction of fourth wave, which can get this market down up to 12,000. And from 12,000 onwards, again, an up move is going to start. All right. So the point here is, what I'm trying to tell you is, for last 1 month, I have been saying this market is going to correct. I never knew COVID second leg is going to come in. I had absolutely no clue about that. I'm not an astrologer. I'm not a mystic that I will know this is how the future would unfold. I knew a correction was due. Why it will come is something I have no answer for. I can't give you that answer, that why it comes and why it is so accurate again is something I can't understand. What I have seen over years is this, and believe me, I have poured my nights into this. I must have spent, I don't know how many man hours working on this thing. And I know what I'm saying. I've seen this precision. I've seen this happening. I've seen it even on a 5-minute chart. You will be surprised, even a 5-minute chart would follow an Elliott wave. That's how the markets move and that's how the markets go. Okay. Now the question, Avinash, थोड़ी सी patience रख ले यार. Okay. Be a little bit patient. Okay. Now understand something. 12,000 is a correction. Believe me, guys, it is not a crash. Market has gone up by how many points? 8,000 points. Out of that, even if it gives you 2,000 points, it takes away 2,000 points. Where is the problem for you? 2,000 point fall is not a crash. It is just a correction. Understand this. And why it happens is that now in the last leg, it's going to be a volatile market. Financial institutions will start looking at taking an exit, and retail would now like to enter into this market because they have already missed the boat. They don't want to lose out.
Perfect. So the video ends. Ashok sir, I have a participant here, Vikas. So he's saying he has attended a session earlier with you when you had forecasted Nifty to go above 10K when it was somewhere around 8,500. And he's saying there was no sign of it, but yes, it went. So yes, we have enough testimony to say that Ashok sir has been right time and again. Every time he has been very precise with his forecast. He says he is not an astrologer, but I know not an astrology, but he for sure knows the science of the stock market. That's what he teaches at Stock Gurukul, the Share Gurukul. That's what he trains people to learn. So that's all about Ashok sir and what he is going to talk today, that you know, a comparison between mid caps and the large cap, why he is very bullish on mid caps, and what are some of the mid caps that he will like you to look at. So that's the brief of the session. Just to set this agenda, gentlemen, we have also, let me add to it, we have kept all of you on mute deliberately, uh, so that you have clarity of voice when Ashok sir speaks. But that doesn't mean that you can't ask questions. You can write your questions in the chat, or you can raise hands using the Zoom button, and my team will allow you to unmute, and then you can speak out. So that's the flow of the session, and I have already explained the agenda. So with that, I am handing it over to you, sir. Ashok sir, you can take over now.
Yeah. Thank you, Rajesh. Good evening, guys. It's always a pleasure to be here and interacting with you. I do get an opportunity to share my views.
Ashok
Yes,
sir, if you can adjust your camera a bit, I mean your
yeah.
laptop. Yeah, yeah.
Am I visible?
Perfect. Yeah, perfect.
I'm using a bandana these days. My hairs have really grown long now, and they keep falling in my eyes. So that's the reason I'm using a bandana right now. Uh, okay, guys. It's always a pleasure to have all of you here, and it's fun to talk about things which I love to talk about the most, which is stock markets, right? And whether we call this a study, we call this whatever we want to give it a name, we can. But at the end of it, believe me when I say this, that the only thing which works in this market is Elliott wave theory. I've seen this over numbers of years, and whatever my work is all, it's totally about Elliott waves, okay? And that's what I'm talking about. Yes, there are two scenarios in the market. There are always two axes which we look at. The right axis, the vertical axis is where the price is. The horizontal axis where the time is. The time part is something I'll probably take in one of those webinars in future. But as of now, today we're going to be only talking about the time axis. Okay. So I
Ashok
think
sir, have you started sharing your screen, because we can't see
no,
your screen?
no, I have not yet. I
Okay.
thought Ashok was going to share the PPT. Ashok, are
Okay.
you going to share the PPT?
Yes, I'll do that.
Yeah. So there is someone in Galaxy M2, everyone fortunate enough to have long hairs. True, yeah. Except my wife throws a fit when she sees me like this. Given a choice, I will never take a haircut. That's just on a lighter weight. Okay, I've always had long hairs. I love to keep them. All right, guys. The topic today is mid-cap stocks, right? Now, it's interesting about mid-cap stocks. Okay, when we talk about mid-cap stocks, the first thing which comes into mind is मार देते हैं यार ये. In a way, yes, and in a way, no. Historically, mid-cap and small caps have always outperformed large caps. But somehow the story went haywire about last 3-4 years ago, and there's a reason for it. The basic reason for it is around the closing of fifth wave, mid caps start falling down. And when mid cap starts falling down, it's like there is no bottom there in them. Okay. So this is one of the concepts which I would be developing with you now in this seminar. All right. Ashok, can we have next slide, please? Okay, I want you guys to have a look at this now. This is a typical idiot wave structure which I'm trying to show you. Okay, this is I'm starting from the first. Ashok, go back. The first leg is what started around March end 2020. the second, the third, the fourth. Now, this fourth wave is not being very convincing. The ideal level was that this market had got to go to 12,500. Now, in my previous webinar, which I had taken, I had also mentioned a level that if 14,200 is breached, then we will hit 12,000 or 12,500. Unfortunately, it did not do that. But it did stay in a range for almost 3 months. Now, this was the minimum time we needed if the correction was to be a time correction, not the price correction. And then a previous high taken out. Now, based on Elliott, we have gone into the last leg of the market. Ashok, next slide, please. Now, this is how the last leg of a market looks like. 0, 1, 2, 3, 4. This 3 is taken out and market is going to go up. These are the levels which we have right now here, starting from 16,500 to about 19,000. This is where the story of bull run is going to end. Now, how long it's going to take in a historical perspective, what I remember is from 2007, I was waiting for a correction which came in 2008. This year, this time around, I was waiting for the correction from around 2018 December, and the correction materialized somewhere in February 2020, if I'm not mistaken, or maybe around this period, January 2020. Okay, that's how the markets fell. Now it is that, yes, we are in the last leg, and when it will start following, no one has any clue when it'll start falling, but that level is going to be between anything between 16,500 to 18,500 or 19,000. Second, mark my words, this fall is going to be as severe as 2008 fall. So to keep this in mind. Next slide, please. Is this clear to everyone, I suppose? Now, this is what I'm trying to show you are certain very, very important patterns of a market which we follow in Elliott wave. This is the traditional way of looking at an Elliott wave, where you are looking at various kind of impulse moves and corrective moves and their shapes and ways they behave, right? So when I'm teaching, I'm not using, believe me, any of these corrective waves. I have transformed this Elliott into something which is very simple to do it. And the concept I call is wave within the waves. This uh, this slide is basically to give you an understanding of a traditional way. Look at this 1, 2, 3, 4, 5 here on the extreme left. You would see, okay, this is a basic structure. This is how the markets correct. That's exactly I'm trying to show you the ending diagonal, the zigzag, the expanding one. These are what are the terminologies that traditionally we look at. Now, when the moment I start working on to now on a very different concept. See, what happened was these were beautiful patterns to look at, but the moment you start working with these patterns, it takes huge amount of time and a huge amount of effort to comprehend them. Yes, I did them, and then I came out with my own versions of working onto the idiot way, which maybe if time permits, I will discuss with you. Next slide, please. Next slide, Ashok. Now, what happens to the stocks in the first move, right? The first move of a market is run by the large caps. And these large caps are the one which start moving around, and the mid caps are just languishing around, right? And this has started around March 2020. And just to give you an idea of how the stocks have moved in large cap, 900 Reliance prices, 2000 plus. Look at these stock prices, right? They've almost every stock in large cap has doubled up from the time this March 2020 started. Okay. Is that now there's something which I want to add. I have not intentionally picked any of these stocks. They're just arbitrarily I picked the stocks. There's nothing like I'm trying to show anything except this, that, yeah, this is an arbitrary thing which is happening right now. Okay. Next. Next slide. Now look at this. This is again the mid-cap index. Mid-cap index is again approaching its top. If you look at it, 1, 2, 3, 4, and this is also moving towards the fifth wave. Okay, it's following the same concept. All right, let's move ahead. All right, now I want you guys to read this again. Mid-cap stocks are the ones which have high beta. Now, for someone who's not very familiar with technical terms, beta is with reference to an index, how much would a stock move? No, it's something like if something has a beta of 4, what we are trying to say in general terms is that if index moves by 1 point, this stock will move up by 4 points or fall down by 4 points. So basically, these are the stocks which move more than the indexes, since index is the benchmark for measuring the beta. All right. Now, essentially, when they have a high beta, what we are talking about is a high beta is where you will have stocks which are outperforming or underperforming the stocks, right? Now, usually the high beta stocks become very favorable around the end of the third wave and in the beginning of the fifth wave. Okay. Now, Ashok, just punch in once more. Yeah. Now, if I have to define mid stocks, okay, that by definition, this is the definition of mid stocks given by NSE. For me, stocks up to 500 rupees, I consider them as virtually a mid cap stocks, even though they are part of Nifty 50. Now, is the mid stocks essentially are the stocks which have a smaller base as compared to the large cap stocks. Now, if a stock has a smaller floating capital, thereby it becomes more easy to manipulate the stock, or the movements get manipulated. Okay, so that is the reason. Now, what I want you to read is the last line. One of the reasons being the valuation gets extended in large cap and price-wise stocks become quite expensive, whereas mid caps are relatively cheaper stocks in that segment. Now, what I'm trying to say is watch it like this, that ACC as a stock is virtually doubled up on the price. Now, what happens for people who is now entering the market is they would start looking at a cement segment stock, which is much lower priced than ACC. Okay, this is what I'm trying to explain here. Can we move to the next slide? Yeah, keep punching in. I couldn't resist, Ashok. I couldn't resist writing this. Risk is ishq hai to kood pado, ya to डूबोगे या उड़ोगे. The famous Harshad Mehta movie quote, right? And this and but understand the risk associated with this is high beta. That means they are more volatile. Operator driven, yes, believe it or not. I mean, we all deny this as a fact that there are no operators in a market and stocks cannot be manipulated and things like happen, right? But this is not which is true. Uh, there are always operators in the market, and it's easy to operate a mid cap stock because it has a lower floating capital stock in the market. Okay. Now, why does mid cap outperform in the last leg? Now, this is what I want you to read. The start of a bull run is when large caps move, which we've seen happening from March 2020. Now, as we are approaching the last leg, these mid cap stocks have started moving in. This is an effort to show you how what is happening in the market. Can we have the next slide, please? Now, on this is on 27th, 5th, right? There were two stocks which were hitting a buy. One was called TCI Developer and Reliance on that day. Reliance was already in an up move. Now look at this chart. If you look at these charts, you would see the Reliance chart. You know, I'm showing you from here. Look at the way it's moving up. There's a small dip correction and it's going up, right? And look at this chart of TCI Developer. Look at the fall it has had. Now, if I was to make that 0, 1, 2, this would be 0, this will be 1, this will be 2, and third is where the move has started. Now, in this chart, if I look at it, there's been an extended move which has been up. There's a small correction, and then the movement has started again now. Now, if I have to look at this, this has a more high potential to go up. The risk reward is in my favor because it's still very close to bottom, and here the bottom is way below. It's somewhere at 900. Whenever the correction comes, Reliance is going to tank more than TCI Developer. Okay. Next slide, please. Now, this is GIC housing, which is again hit a buying level. And it's been very strange that I had given this buy uh, about 2 or 3 days ago at a certain value. And it hit the value of 142.80 day before yesterday. And yesterday, it made a high of 152. It just shot up like a rocket. And that was where I said, start booking some profit here. And now look at this chart. What I want you to see is in a long-term chart. Now look at the long-term chart. It's just coming out of a downtrend. Now, and if I look at this chart, this is 0, 1, 2, and we are in the third wave, which still has a potential to go up to higher, then correct and still go up. Okay. This is what I was trying to explain. Next chart, please. Next slide, please. Now, this is on 1st of June. These were the stocks which had hit by Nath Biogen and Adani Port. Now look at this. This is the Adani Port chart, right? Look at this chart. This is how it started moving, right? And look at this. This is just coming out of it. Now 0, 1, 2, and this is starting. Here 0, 1, 2, it's already done 3, it's doing 4. This is the last leg. And for this, the move has just started. Okay. Next slide, please. Now, these are my working charts. I would get into the detailing here of how I look into the stocks and how I find them. Okay. Now, this is again Nath Biotech and Adani port charts that I'm showing you. Next slide. Now we are back to on 2 seconds. Now the stock which I was targeting is Satluj Textile, right? And it seems so strange that these are the names you probably unheard of, but then these are the stocks which are triggering buy and they are just shooting up like a rocket. Okay, next slide. Now, this is on third, right? And what we have is Ashai India as a stock which we were looking at. And we did get a stocks on a large cap also. Okay, the next slide. Now, how do we pick a stock for the next day? So since Monday is going to be the beginning day for us now, that's what I'm trying to show you. Look for the volume gainers. And what I'm looking for is the volume gainers in Nifty as well as Nifty 50 stocks now. Next slide. Now look at these. These are the charts which you would get it on the internet. If you go punch in volume breakers, you will get a list of stocks which have taken a breakout in Nifty, and it will also give you a stock which have taken a breakout here, right? Now, if I look at these stocks, I have SP Apparels and NIIT in mid-cap stocks. That is the breakout which has happened. And here we are looking at Coal India, and there's one more stock, I think Bajaj Finserv. All right, these are the two stocks. Now, these are the four stocks which I would target. Now, these are basically done as a volume study. Now, if I'm doing a volume study, there's something I want you to understand. A large volume breakout does not mean that there is a financial institution participation. Wherever there is a financial institution participation, there would not be a large volume breakout. Large volume breakout always happens when the retail customers are in the market. Okay, that is one part. And this will be now we're talking about how this is going to pan out, how we look at them, what is the risk reward. Okay. Now I'm just comparing the charts. Okay. Look at these charts. This is a chart which is just look at it. It's coming down from a downtrend and is going up. Now look at this chart. This is just constantly going up in one direction. The law of gravity has to hold true at any given point of time. Whatever goes up has to come down, right? And then again, the universal rule of every action has a reaction. Anything which has come down has to go up. Anything which has gone up has to come down. Now, when and how we work with these things are the probabilities which we assign, which I will now be doing with you. Next slide, please. Okay, now I'll start working on charts with you. Now, what I'm trying to show you is how do I look at a chart, right? Now, before locating a stock, there are about 2,500 stocks in NSE. It's impossible to keep track of every stock. So what I look for is the first thing is the volume gain. I'm looking at the biggest volume gainers of that particular day. And I will look at two segments. I will look at one Nifty 25 stocks gain and then Nifty 50 gains. And then I compare all the charts and then arrive at a conclusion. Now, before I start onto the charts, if anyone has any particular query onto whatever I have done till now, I will take an answer. I'll answer that before I move on to the chart. If anyone has any question, please. Is there any question? Okay. Rajesh, can we have this?
So we have two participants who have raised hands. So if
Right.
you allow, we can unmute them one by one and they can ask questions.
Yeah.
Okay.
I can see one, Prasant Prusti.
Yeah, Prashant, you can unmute yourself and you can ask your question.
He's probably not able to do that. Galaxy M10.
Galaxy M10, you can unmute yourself.
Hi, so myself Nitin Sharma.
Yeah.
I have one question, that is there any possibility MidCap make another low, lifetime low?
Yeah, we can only beta look at the probability at a given scenario. Okay. As of now, I'm looking at an up move. All right. Okay. And what you were saying, yes, it will, whenever the correction happens, they would fall more rapidly than the large cap. You are right to that extent. Okay.
ADDDD. So A triple D. I can see that username. So you can unmute yourself.
Yeah, sir, I just want to ask that how much leverage can I get to trade Nifty?
Beta, aajkal there have been changes in the rule. I think leverage has been reduced. Since I'm basically leverage in the sense, if you're saying कि intraday में वो कोई आपको extra position लेने देगा कि नहीं, so then it is that every broker has his own set of rules. The guy who was probably giving you the best facilities was Upstock, which I have experienced. After that, I don't know. Now there are a lot of things which are changing. Okay.
Okay, and apart from intraday?
No, I mean, what exactly you want to know? The leverage where in future and options or equity segment? Which segment are we talking about?
No, futures and options.
Future and options mein to leverage is already a built-in part, beta, because you're just putting in about 10 or 20% of the money. So rest of it is leverage. Understand the leverage concept. ऐसे सोचो बेटे कि आपको, if you want to buy Reliance, okay, the whole lot multiplied by the share price is the amount of money you need to put in. Are you clear? Right? So when I'm buying a future, I'm just paying the margin money, so you get the leverage there. Now, if you're saying कि वो leverage के अंदर भी leverage मिलता है, नहीं, that doesn't happen anymore. Okay?
Yeah, Kanaya, keep moving. Mr. Arun Mahinder, you can unmute yourself.
Yeah. Thank you.
Yeah.
Hi guys. Hi sir. My
Hi,
question
Arun.
is,
Yeah.
I just want to know, as per the current COVID, is there any chances the delivery or the courier industry we can put shares on or buy shares or sell share? With
Why
respect to
not? Why not? Arun, for me, the game is not a specific sector. I'm looking at the volume breakouts as on today. Okay, so if we move into a sector specific, the whole seminar will change into a very different level. You got it?
Okay. No, I
So,
just want to know the perspective. Like
yeah,
you
why
gave an
not?
example.
Yeah.
I just want to know the
So
examples. That's it. I don't want to go into depth
yeah,
because I'm new to
just give me
trading.
a stock. Just name a stock. I'll take up the chart for you.
Sure. No problem.
Okay. When
Yeah, thank
we do it, once I'm done, I'll ask for questions. That's where you raise, and I'll open the chat for you. Okay.
Sure. Done.
By that
Done.
time, you would be quite comfortable with it. Okay.
Yeah, sure. Not a problem.
Yeah.
Thank you.
Vikas,
Well, sir, good evening.
good evening.
My question to you is, since Nifty has seen a time
Vikas, I couldn't hear you. Can you repeat it again?
since Nifty has given a time correction for last 3 months and now
Yeah.
has breaking out from the previous high,
Yeah.
and the mid cap this time has rallied quite a bit. So can it be safely said that the last leg of this rally has been reached and probably after this we
No,
see
Vikas,
more?
Vikas, hear me out. Okay. Uh, Whenever there is a breakout and a big cap rally starts, that means the fifth leg has started. All right. Understand it like this. Large caps were languishing. Mid caps have started moving. So that means we are in the last leg. And in this last leg, mid caps are going to outperform. Because have you got that as a concept? Vikas? Vikas, I think I don't know, probably he's not responding back. Anyone else? I think Prashant is still waiting for his question. Manu Mehrotra.
No, Prashant, you can unmute yourself. We are asking you to unmute. You can unmute yourself, Prashant.
Meanwhile, Manu can say, yeah, Manu, what's your question? Manu, are you not audible? I can't hear you.
Sorry, sir. I was not able to unmute myself.
Okay, no.
I was just asking, sir, seeing the current growth since the last year when Nifty Midcap went to somewhere around 10,000 and now it's around 26,000.
Yeah.
Do you think it's because of the bubble that got created because of the extension of the foreign investments that came to India, plus the stimulation release, and also the decreasing cases of COVID, and it's not actually a good indicator, and like this bubble will soon burst and we'll see a downfall?
Manu, you are too young to observe it. I'm amazed at your observation. Okay. Wonderful, beta. Understand something. Why are these markets moving up? There's no logical reason for these markets to move up. You were probably in a generation which has not seen these things. I have. I don't know if you won't even know when was PB Narasimha Rao's government there, right? Before that, all the time in India, we used to print notes to boost up economy. Worldwide, this is what is happening right now. All these markets worldwide are liquidity driven rallies and anticipation of more benefits coming into the markets worldwide. It's a worldwide phenomena, and that is why whenever the reality check comes, we are going to fall. Logically, this is where I'm saying that we are due for the last leg. When it happens, maybe gut feel. All right, don't quote me anywhere. Gut feel is the day COVID ends, these markets are going to collapse. Take it from me. All right. And there's a very interesting saying in the market. The bear run starts whenever the last the bull dies. And the the bear market starts when the last bear dies. We will come to a point you will say, bus, I'm never going to short in my life. That is where the market will start coming down. Okay? Clear? Someone called Jitin.
Yeah.
Yeah, Jitin.
Hi, sir.
Hi.
Jatin here. Thank you for
Yeah.
giving this opportunity, first of all.
Yeah.
Sir, how long does this phase last? you're saying we are in the last phase. So, according to your experience, the way you think,
No,
how long does this phase?
Jitin, it is like around 18,000 till about 18,500. I'm looking at a level. Okay. Historically, the downtrend does not come suddenly. Okay. For about a year or so, it will go in a range. Or 6 months, it'll start moving in a range. Okay. And when it starts moving in a range, that's where the danger signals come in. I'll try showing you on this, Jitin, on the chart. Okay. On the Nifty chart, what I'm trying to say. So
I have a second part. I have
yeah.
a second part of the question also.
Yeah.
I've tried the way you just told us that you try to catch the volumes of a particular XYZ share.
Yeah.
I've tried to catch that volumes, but I've always failed.
No, I'll tell you, Jitin. There are two things. Volume is the right approach. You got it. Entry is where you need to figure out. Okay, that's what I'm trying to show you. The key is the volume breakout. But remember, when you're doing a volume breakout, it's not a long-term hold. All right. Now, if I'm working with a mid-cap stock, right? I am only targeting 10 to 15% return and getting out of that and looking for a next stock. Do not hold them for life. Have you got it? Now, Reliances of the world, you can hold for life. I have no problems there. All right. GIC Housing Finance. I gave a buy at 142, 152. The moment it came, I said offload 75%, 25%, hold, maintain, buy price as a stop loss and ride the trend. Wherever you want to take an exit, you take it, right? Now just think in terms of return on investment. A mid-cap stock, 100 rupee stock giving you 10 rupees return in 3 days. इसके बाद तो यार बच्चे की जान ही लोगे क्या? That's how it moves. Got it?
But just share like Deepak Nitrate.
See, Deepak Nitrite is moving because of the chemical story which is going around, right? Okay. So Deepak Nitrite is one exception. It's a very well managed company if you look at it. Okay, and it's one of my favorite companies when I'm looking at the chart. Although I don't trade in Deepak Nitrite. Okay, for me, but given a choice, yes, I would love to follow Deepak Nitrite as a company. I've seen that story grow. Okay.
Okay.
So I'm an engineer also by profession. So as an engineer, it was a very interesting story to follow, Deepak Nitrite, right? So that is why the interest there. Okay. So if there are no more questions, Rajesh, can I be given a 5-minute break to go use a washroom and come?
Vikas Jain got disconnected earlier and couldn't answer you back. So
Yeah.
I have put him on unmute again.
Yeah, Vikas.
Ashok, in the meantime, can you stop sharing the screen?
Yeah, Vikas.
Yes, sir, I understand the concept. Yeah, can you hear me now?
Vikas, you're barely audible. You continue. If Rajesh can hear you, he will repeat the question to me. Okay?
So I understand the concept that you were explaining, sir, about how the last leg of the rally behaved in terms of mid-cap outperforming
I am not able to hear anything.
Because you're barely audible. Do one thing. Just type in, and after this, I will take your answer once we are ending the session. Can we do that?
Sure.
Because you're barely audible, Vikas. Okay? Okay, just give me a 5-minute break. I need to use a loo and come back, and then we can start again, Rajesh. Meanwhile, you can handing it over to you. All right.
Perfect. So I'll take those another whatever 2-3 minutes you give me.
Yeah.
Introduce about Share Gurukul.
Yeah.
Perfect. So I know Ashok ji will be back in a few seconds only. So I will try to be a little quick. So what Ashok ji was trying to tell you now is just an extract, just a small extract of the plethora of things that he teaches, he and his team teach at Share Gurukul. So at Share Gurukul, we kind of start from the very basics. So we have programs for the very beginners who are new to the market. We have programs for people who are at the intermediate level of the market. We have programs for people who have been seasoned traders or maybe derivative traders. And we also have programs for people who are more of fundamental investors who look for doing long-term investments. So what I'm trying to say is, irrespective of your investment approach, irrespective of your investment behavior, we have learning programs, we have content to train you more, we have content to coach you more based on your learning expectations, based on your trading behavior. One thing we always keep saying, and all of us at Share Gurukul always quote this, Warren Buffett quote, that the risk in market comes from not knowing what you are doing. So the idea is that you should know what you are doing. The more you know, the more you are in command of your trades. So that's what we teach at Share Gurukul. So the entire program, as I said, is framed in such a way that even a beginner can come in, people at intermediate level, at a seasoned level, and fundamentals. So that way we have broken the programs in different parts. So the first part of the program is stock market and derivatives. So we begin from the very basic things, very basic, teaching you even what about the basic nuances of capital market, what are derivatives. So the content that you see is what is covered in the program. I'm trying to be quick. This all can be shared to you on WhatsApp as well, because I've just got 3-4 minutes time from Ashok ji. He'll be back soon. So this is a 24-hour program conducted only on Saturday, Sunday. Only on Saturday, Sunday, 2 hours each, right? So that way, this is the first leg of the program. Then you have the second part of the program, that's technical analysis. We start from the very basics of technical analysis, but go on to advanced level. So it covers all about various charts, patterns, the indicators, the oscillators, everything, and the volume charts as well. So this is the technical part, which is the part of the program which is good for people who want to understand, who want to learn technical analysis from beginning. And for people who already know the basics of technical analysis, who already know the basics, who want the professional level, a very higher level of analysis learning, for them, we have the other program, that's technical analysis professional. This is something where you have all the proprietary designed trading techniques and strategies of Ashok Jain ji coming straight to you. So as he was saying, Elliott wave, but in a different frame altogether. Not what you kind of the Elliott wave that you can go and study from a textbook, but in a different frame altogether, and coupled with his own strategies, with his years of experience and market observations, is what you gets delivered to you in this technical analysis professional part of the program. And then, as I said, we have a fundamental analysis program too. So people who want to kind of learn fundamental analysis for long-term investments. So this covers everything. So we kind of also teach you the basics of tools that you need to learn, you need to assess for company analysis, industry analysis, economic analysis, quantitative as well as qualitative. So that's what the program is. It's a 16-hour program, a short and sweet program. So bringing it all together, just to summarize, so stock market, what we at Share Gurukul, what we do, this is what I talked about. Our faculties, so yes, the program delivery, entire program delivery is headed by Ashok Jain sir himself. And we have some of the very best of the faculty members like Rakesh, like Rishi Mehra, Karan, Rahul Prajapati, Arun. All these faculty members have been personally mentored by Ashok Jain sir. Any content that you study, maybe let's say, for example, stock market beginners program, let's say that is being taught to you by Rahul Prajapati, Ananya Agrawal, and Arun Mani Tripathi. But the content that they are teaching, that has been personally curated, mentored, and is being observed by Ashok Jain sir himself. So that way, the entire program is delivered under the mentorship of Ashok Jain sir himself. So that's the key USP. It's not that any other faculty coming and teaching you. The other faculty is more of a mouthpiece teaching you. The brain behind all the content and teaching and the strategies is Ashok Jain sir himself. So those who want to join the program, so we have both classroom options and the online virtual options, but classroom option is not functional these days because of COVID protocols. The campus is closed. So the only option is online virtual sessions. The online virtual is like the way we are interacting live session. The only difference is it's a webinar, so we have kept you on mute, but in the class, you all are unmute. You can all go live, talk, discuss. So it's more of a very classroom experience on the screen. That's what I call online virtual session. And the best part is you can do it at your home. I mean, enjoy this lockdown period. There cannot be a phase better than this for learning, right? Better than this for learning. So you can learn from the best of the people, right, sitting at your home. So this is the program that we have. So stock market and derivatives program. That's the first program priced at. So you can always the fee for each of the program. So the 4 programs, all those 4 in the online virtual session. If you go for virtual session, you kind of save 25% as compared to the classroom fees. So it's another benefit for you to join online because you save almost 25% of your fee. So for all of you who came today, I mean, yes, we understand Saturday, that to Saturday early evening. So being here, I mean, yes. So we respect your time. So for you, we have something special for you. So one, of course, because you join online program, so you end up saving 25% on the fees as compared to the classroom. That's one of the advantages for you to join. Second, if you join in the full package, so not picking 1 or 2, if you join 3 or more is a full package, then you end up saving additional 20%. 3 programs. So 1, 2, 3, if you join, you will save 20%, additional 20%. So that means 32,000 program becomes close to 26,000 rupees only for you. So you save 20% on that. So that's a package deal for you. And the most interesting part is, if you want to enroll, you don't need to pay the full fee. All you have to pay is pay just 10%. Balance comes in easy EMIs. We have 0% interest, free student loan tie-ups, student loan arrangements with NBFC, so that your finance gets processed from there. And that's the other advantage for you. So these 3, what you see is a standard thing that you will get even if you join the program tomorrow, or even if you join the program after a week. You will get 25% discount on virtual fee as compared to classroom. That's standard. If you go for a package, 20% off as compared to the total fee, that's standard. You will get it. The student loan arrangement, standard. You will get it. But what you will not get tomorrow, let me repeat that. What you will not get tomorrow, you will get only today, is if you join 1, 2, and 3, 1, 2, and 3, then in place of 25,000, you need to pay only 22,000. So you save 3,000 rupees more. So another 12% discount there. If you join for all the 4 programs, 1, 2, 3, 4, so in place of 32,500, you pay only 30. That's another 11% discount there, right? 10-11% discount there. So that's the deal for you today. So if you join today in a group program, so you save more. So at 22,000 only, you kind of learn all 3 technical analysis program, and at 30,000 only, you learn technical analysis, fundamental analysis, stock market, all the complete package of the program. So that's the deal for you today. Those of you who would be wondering, so what do we do now? How do we enroll? So this is a number that you have to call. Ashok and Kanaya, if you can type this number in the chat box, that will be another help. So you can call on this number. My team, Tavleen and Sachin, they are there on the call. They will be available to help you, and they will facilitate you joining the program and meeting you, Ashokji, soon. So that's about it. That's what I had to share. And Ashokji is back anyways. So, sir, over to you. Ashok sir, over to you.
Sir, you are mute. Please unmute yourself, sir. Not audible.
Am I audible now?
Yes, sir.
Okay. So, guys, we finished this, and now I'm starting with the stocks we had shortlisted. All right. So, the first stock which I remember is Coal India, is the stock we were looking at. Okay. Now, Coal India is, I have picked up this stock for you guys, right? Now, this stock is something which we are trying to find with the setup which you have. I'm first showing you the setup which probably all of you have with you, okay? Now, this is something which is not Meta stock specific, the software which I use, all right? Ashok, you need to do something about these pop-ups which keep getting me. I told you that day also. Cool.
Okay, sir.
Coal India Limited. I'm opening the chart, guys. This is the chart of Coal India Limited. Okay, now what I'm looking at in this chart, look at this chart. I have a Elliott wave count created here that is already done 0, 1, 2, 3, 4, and now it's moving towards an up move, right? Now understand one thing. This is, look at this candle. I believe you guys would understand something about candles, right? Now, if you know about the candles, what you notice is that this is a big green candle. Now, what I want you to focus here is that when did this green started happening here at the bottom? Now, this is a trading system which I teach in the class, all right? Now look at this trading system. This is giving me an entry level on this particular day. Now just watch. I'm going to do something for you guys today. This is on 28.5. This is still giving me a gray zone. A gray zone is what is telling me that market is undecided. There is no trend. Look at this on 31st. This has become green, but here what you notice is the color of the candle is black, which is telling me that the momentum is not there. The momentum not being there means that the volume participation is not yet coming through. Now just keep looking at the chart. I've gone almost 1 month behind. look at this chart now. From this particular date, this is started turning green, which was 31st March. Now on 31st, there was a signal which was generated to enter in a buy, which did not give a volume support. Now, as it continued, just keep looking at it. This is turning black, black, black. Okay. These blacks say that there is no momentum, but stock is in a buy. Now, if I'm teaching someone this is a very, very crucial zone. As a derivative trader, I will take position here. As a technical trader, I'm still waiting for a confirmation to happen. Now, this was again on 3rd. I had a green candle with a green bar on it. Now, I could have only taken this stock if I was tracking Coal India. If I was not tracking Coal India, I would have not found this stock. Now, the yesterday when I ran the scanner, the Coal India was there on high volume charts. Now, if I'm looking at a high volume chart, notice this candle. This candle is giving me a jump. Okay. Now, when you enter is the key here. Remember, the price is 154.40, and from where it started was 144. It has already moved 10 rupees. Now, I would either wait for it to come down to about at least 3 rupees from this high is one way. The second is 148 was the low, 154 was the high. It's come up by 8, again 6, 7 rupees. Okay. Now I want Coal India to fall down to at least 150, 151 before I take an entry. Now, there was someone who would ask this question that he's followed the volume thing. Now, in a volume thing, you will have to remember one thing, okay? What you have to remember is a volume breakout can go either ways. It could be the trap, it could be the top also. So what you wait for is a classic pattern of retracement and then a breach. That means I want this to come down to this level. I'm using a retracement tool, right? And it must retrace to about 38% value. And that 38% value, if it hits and then takes out the top, is where I'm going to enter. That is the key which you have to remember in this. Now, if I've taken this position, the next call for me is what would be my target and what will be my stop loss. Now, in a bull market, assuming that I'm looking at this chart and this is very simple. Anyone who doesn't even know technicals can understand this. 0, 1, 2, 3 you have got. We are in the 4th mark. Now, once you are in the 4th leg and the price has started moving up, now I'm repeating again, I'm going against the technical analysis book. I will not use a SL. I will create an average here. Okay, you get this is the retracement is the key in a market, right? So whenever you are playing with a volume breakout, you have to wait for a retracement to happen. That is one. Second, you must be very clear that it has started moving in a trend up. Now, I have a trend up signal with this long here, right? And now once I have got this into place, now what I want to look for is how do I fix up a target for exit, right?
Sir, if you can open your camera, would be great, sir.
Yeah, sure. Okay, so now it is that now I have to look for a target. Now there are a lot of technical ways of looking at a target. Okay, one could be a retracement based target. So that is one way of looking at a market. Now probably as of now, I'm going into this as a tool. So my target is 160 and my buying level is 154 after the retracement happened. What would be the second level of target? It could hit 170 also. The second target comes into play once we move on to 160, and after 160, I'm putting this in place. After 160, if this high is taken out, my target is 185. Roughly around 185 could be the target. 165 is one target. And after that, we am looking at 185 as my target. Okay. So after 165, it's going to have one clear run at as visible in the particular retracement levels. Now remember, retracement levels are only probabilities. They are not the definite scenario of a market moving. Right now, I need to now ascertain how am I looking at this. Now, this is a particular tool which I teach in the class. Okay. Now look at this. There is a red solid line which is visible, which is giving me the first resistance level. I'm going to play with parameters here. Okay, it's the same level which I'm getting. So that means this is the resistance now, which holds true because I'm also looking for a price to retrace and then take an entry. So the moment I get a retracement, it comes down by 3 or 4 rupees. And if it takes out this high, then I'm looking for 165 as the first target and 185 as the second target. Now, is Coal India a mid-cap? Is a mid-cap stock? Technically, no. Technically, it is not a mid-cap stock. But for me, any stock which is less than 500 rupees value, I treat it as a mid-cap stock. Yes, by the classification of a mid-cap stock, it is not a mid-cap stock. Okay. Are we clear on this? Now, the second stock which we had found out was SP something. Ashok, just check the name in the PPT.
Which name, sir?
The last stock, SP something it was. Just check the last second 2-3 slides.
Okay, in slides.
Yeah, SP something was the name. SP Apparels, I think.
It's taking few seconds, sir.
Yeah. I think it was SPL Industry, something like this.
Sir, it's SP Apparels.
Look at this stock. Again, a major volume breakout. Now, in this particular stock, notice the black candle. This black candle is giving me an entry level. Here, I'm not waiting for a retracement to happen. The moment the stock clears this 50 rupees high, I'm going to go for it. Okay, this is SPL Industries I'm talking about. So this is giving me a straight buy at 51, except I have to make sure that this does not open with a gap. If it's a gap up opening, I'm not taking a position there. All right, now look at this. This is green. The red candles were showing a negative momentum. This is the market, the trend had turned into green, a buy. The moment this was a buy, a green candle, a retracement has already happened. A breach of this high is where I'm going to take the position. Now, this was what is visible to you guys because you are not using MetaStock. Now, if I'm using MetaStock, I have lot of various scanners to look for various market conditions. All right. Now, I'm going to start with my analysis of how do I look at stocks here, right? Let me come to the quiz. Now look at this. There are one-day high volume, one-day high volume price. I'm not looking at that. I'm looking at one-day volume surge. Remember this. I've added these stocks here. And now I'm going for a scanning here. This is a scanning going on. Now this is a built-in system here in the software. It's going to scan all the data, and if my criteria is fulfilled, it will select the stocks for me. Now look at these stocks here. This AMC I'm not looking at. Now look at this stock, Spenda's Food. I have not heard of this name. You have not heard of this name. Now what it's giving me is a 52% surge in volume. Now if this stack is right now up there, we have a buy coming in. Can you see the jump in volume? Okay, now this is the jump in volume. Now notice something. It made a low, it made a high, and when it closed, it was closing very, very low. That means now a breach of this is where I will take a position here. Remember, when you are doing a volume trade, you want resistance to be breached. You are not trying to catch a bottom. Be very clear on this part. Okay. So this is how you look at the volume breakout stocks. And if you look at the volume breakout stocks these days, you would notice only mid caps are coming out with huge jump in volume. That is why I have been saying that these mid cap stocks are the what which are going to outperform the market. Now I'm trying to fish at the bottom level. Okay. Now I'm trying to do a bottom fishing. Now this is a typical scenario in which I am not looking at volume based study. This is not a volume based study, guys. I'm getting a buy only in this particular stock. Again, I don't even know its name. I've never heard of it. No, I will not trade this stock. Look at these candles at the back, right? Can you see them? This is a typical scenario of where the stock is getting manipulated. I'm not even touching this stock. Okay, so that means low volume chart. I've not got anything here. Now I'm coming to again another parameter of looking at a stock. Now this is where I would be playing with my Elliott wave. Now, this is where I am. Now, look at the bull bars, bear bars. I'm looking at 6 as the number, right? The 6 as a number is giving me an entry. It is giving me the bull entry and the bear entry. Bull entry was at 374, bear entry at 369. Now, I need to check this, okay? Now I'm opening the chart. Remember, the entry was at 374. Stock is still falling. You can see this, right? Now, this is giving me an entry at a level of 374. That means this buy would be hit here as per the Elliott. And 369 was the bear entry, which is useless in these stocks because you can't short them in any case. Okay, so these are the various ways I look at the charts. Now, there can be n number of parameters to look at. Basically, it depends on what you are looking at. As of now, I'm looking at volume breakouts because we are in that territory where the mid caps are going to perform. And the reason being, every day when you look at the volume gainers, you will get mid caps which are jumping up by about 30%, 40%, and large caps are jumping up by about 2% or 3%. Okay, guys. Now, Ashok, can you open the PPD, please?
Sure.
All right.
Is this
आगे
visible?
चल. Yeah. आगे चल. Now this is how I look at the stocks. Next slide, please. Okay. Next. Okay. Now what I was trying to show you was no. Go back. Okay. What look for is the wave count. You've understood that on Coal India. I had marked the wave count. Entry level and retracements. You knew the entry level, but you had this condition of retracement in one particular stock. We needed a retracement in the second one. It had already retraced. That is satisfied. Target, I showed you how I put the target, right? Now, this is the key here. Now, in a bull market, we will never take a stop loss. Remember this. It is ridiculous to take a stop loss and then find your stock after 3 days jumping up again. Okay. Next slide. Guys, these are my calls. I work for Share India also, and this is how I give my calls. But something you notice on the left-hand side, Share Gurukul, you will find all those dates there. Share Gurukul March, Share Gurukul October, November, December. This is how I stay in touch with my students. We have WhatsApp group where we go on a chat mode. Whatever I teach, they are supposed to throw queries there and show me the chart where they have hit a buy or a sell. Okay, next slide, please. All right, guys. Now I'm open for all kinds of questions. Ashok, you need to press enter. Press enter. We are now open for discussion, guys. Can you please stop the slide share? Okay,
So
guys.
guys, you can raise your hand and I will unmute you one by one. If you have any question, you can raise your hand and I'll unmute you.
Sir, Jain sir, please adjust your camera.
Okay. Wait a minute. Where is it? I can't see myself.
Just tilt the
Yeah,
screen.
yeah. Now I
Just
can
tilt the
see.
screen. Yeah,
Now
it's
I can.
perfect.
Yeah.
Perfect, sir. Thank you.
I can see Jagdish ji raising a hand.
Jagdish ji, please go ahead.
Sir, good evening, sir. It was a very nice session.
Thank you. My pleasure. My pleasure, Jagdish ji.
Sir, as you use the volume breakout, I
Yeah.
used the 52-week high for the momentum play.
It's the same thing, Jagdish ji, but only thing you have to remember is you have to wait for retracement and then take the entry. Okay. Don't go on a rising share. Wait for a dip to come and then go. That avoids the false breakouts. Got it? Okay, that's the only correction I can tell you. But Jagdish ji, there is something here which you have to understand. The moment we break the 52-week high, that means we are in a territory where you do not have any resistance or support. So in that case, if you don't understand Elliott, you can get into a major problem there. Okay. I mean,
Sir,
I'm
I just used the 52-week opening of the stock as a support.
Yeah, that is right, Jagdish ji. That is एक चीज आप समझो. You know what I'm trying to explain to you. Please don't understand that I'm trying to sell the course. All right. I am not into that at this age in my life. I don't work for making money. Okay. I'm just trying to make people aware of what is happening. What happens is it's something like the tools, you can read the charts, right? So what I coin it as a competent level of driving a car without knowing the destination. This is how I feel. When I am working in a market, the Elliott is the first thing which gives me the roadmap. And after that, I will move on to anything else. Okay. Are we clear, Jagdish ji?
Thank you, sir.
Yeah.
Sir, just one more small question.
Yeah,
what should be a target for a short-term profit taking?
Depending on which stock you are into. Okay. If it's a mid-cap stock, Jagdish ji, ठीक है, लालच छोड़ दीजिए. 10 से 12% की रिटर्न आ रही है, काट के भाग जाइए. Okay, so understand it. On a mid-cap stock, वो हिंदी की कहावत है, भागते चोर की लंगोटी पकड़नी है, चोर पकड़ने के लिए मत बैठिएगा.
Sir, that means you want us to eat the cake, cut the slice, take your profits or not?
Yes, run away. Large cap, hold. I have no problems there. Okay.
That means Nifty 50 is your long core portfolio.
Yes, it has to be always that. Remember that, sir. Okay.
Thank you, sir. Thank you.
जब भी drawdown आएगा, तो mid cap will murder you. Okay. Right. Next is who's there? Arun Mahinder.
Arunji, please go ahead.
Yes, yes. Yeah. So my question again.
Hmm.
Actually, I'm looking out with the perspective of trading for as a investor.
Yeah.
So make my question quick and short.
Yeah.
I'm if I want to take up mid cap, and as per the indicators what you told, I want to make savings from trading. So I just don't want to just make a buck. So I'm looking out to make some good money. So
So that means we are looking at long-term investment horizons,
that's what.
Arun, and this is not the right time to do it.
Oh, okay.
Got it? This is the time to be with small profits. Remember, March 2020 was the time to invest and sit. You were sitting on 100% gain right now. Got it? So understand this, Arun. Have you ever traded these markets?
No, I'm just started newly.
Arun, tell me something. Okay, I'm asking you a simple question. You take a trade, right? You've bought a stock.
Yeah,
Now
yes.
imagine in 5 or 10 minutes you live every emotion of your life if you're looking at that stock. Literally, okay? This is a very tough place to be in. So you have to have certain basic knowledge, Arun. All right.
Okay.
Once you have a basic knowledge, you know exactly how to cope up with it. And understand that in a bull market, everyone makes money, yeah. Got it?
Okay.
Everyone makes huge amount of money. Now, I don't know, you've not experienced this. There have been people who were sitting on huge amount of profits, all right? And then the COVID came. All their profit got eroded and they ended up in a loss. So the thing to understand, Arun, is when to take the exit from the market. Now, remember one thing. When we do real estate in India, okay, demand supply is always in our favor in urban cities. Okay, so you can have a long-term hold. In stock market, you cannot have a long-term hold because government policies keep changing for sectors. So there's always a cyclic rotation in the sectors. That is why you must learn when to exit. After that, you are sitting on diminishing returns. Got it? Clear?
Yes, sir.
Okay.
Thank you.
Yeah, welcome.
Ashok sir, due to paucity of time, we have only around 10 minutes left because we have another meeting scheduled at 6 o'clock. So we can only take one or two questions.
Yeah, so what I do is, what we can do, Kanhaiya, is, all right, guys, since all of you are here, you can connect with me anytime after 5 o'clock. Talk to the person concerned here. I will answer your queries. And joining the course is not a requirement there. All right? We can discuss anything you want. Just fix up, call the counselor or the concerned person. They will fix up an appointment with me and we will sit down and discuss. And remember, I'm again repeating, you don't have to join the course for that. All right?
By the time, sir, we can take one question
Sure,
from Jitinji. Jitinji, you can unmute yourself.
Hi, sir. Back again. Quick question.
Yeah.
Sir, when you say mid caps are risky factors, why don't I'm not sure how to put this question, but why don't we trade mid caps via ETF?
Yeah, we can, but
instead of
ETFs are not there in mid cap, beta. All right. You get it? You can possibly take that mutual fund route of mid cap. You can talk to the guy to have a fund which is basically mid cap based, right? So the problem there is, do not go for tax saving, because mid-cap is something where you want to exit, make your money and take an exit from the market. All right. Mid-caps are like, you are there when you are in a high tide. You are not waiting for a low tide to start, because once you get trapped into a low tide, you are gone. Got it?
Okay, sir. And is it advisable to book profits in Nifty 50 shares if you have, which are giving you a good amount of percentage wise, and sit right now as we are on the kind of fourth or fifth phase of things?
Simple. Can I know your name, please?
Jitin.
Okay, Jitin. Very simple. जितने अपने पैसे लगाए हैं, take that out and let your profits run in the market. Got it? Jitin, have you got it? You invested, let's say, at Reliance at 900. It is today at 2000. Just sell 50% and let 50% remain in the market. That is your profit, right? See, the problem is, as an investor, the biggest mistake people do is they never book periodic profits. Learn to book periodic profits, guys. Okay? Anyone else?
I can't see any raised hand, sir.
Okay, no, Jitin had a question, sir. Do we need to download this Beta Stock Professional? No, Jitin. Once you join the course, it is a part of your course program. Okay. Anyone else? There are a lot of queries here. I think what we can do is send these people my. Let Tavleen coordinate and fix appointments with all these people whose queries we have not been able to answer. Can we do that? Kanhaiya?
Sure, sir, definitely.
So we give the numbers of both these people here, and let these people coordinate with them, and we will take care of whatever they need. Right?
Sure.
All right. Anyone else left with anything who wants to know anything?
We will connect with you one-on-one, sir. If someone wants to talk to you, has any doubt, we will connect with you.
So, all right, we are ending now then?
Yes, sir.
Okay,
Thanks,
guys,
thanks
it was a pleasure interacting with all of you. Thank you so much.
Thank you. Thanks a lot. Signing off.